Alright, so welcome back to another session of the weekly forecast. Let's start with YM. Okay, so I've marked the previous month's highs and lows on YM, which is this candle right here. And then we can see that on the monthly time frame there is a bullish fair value gap on Dow Jones. We barely pierced the previous all-time highs right up here. So I do think that we're still going to continue to expand higher. How far can it retrace back into? I'm looking at this inversion fair value gap. That is how far I'm expecting YM to reverse. Next up we have Nasdaq. So for Nasdaq, we have a bullish fair value gap as well on the monthly time frame, together with the down close candles. So this two down close candles is the bullish order block. And because Nasdaq has still some room to go to take out the previous month's low, which I think that is going to be the objective for next week, I'm expecting Dow Jones to trade even lower, which is why I'm looking at the inversion fair value gap previously. So similar to ES, I think we are looking for the previous month's low as the draw on liquidity before we continue to go higher. Okay. For bond futures, I am looking at July's high, which is the previous month's high. So far it is unable to close below this up close candle, which indicates further accumulation / reversal. So if we take a look closely at the month of May, you can see that for June and July, we are still trading within the range of the monthly candle of May. So I'm expecting the third candle and the fourth candle to take out May's highs or lows. Usually that's the case. Now, because we are nearer to the highs of the previous month, I think this candle itself in August, we're going to trade above July's high, and we're going to seek May's high. Probably trading into the wick over here, the body first, and then the 25% and then the 50%. If it is going to trade into the 50%, then I can see that this gap or this fair value gap right here would be the next draw on liquidity. Even though it has been utilized before, price can come back up multiple times because it hasn't closed below this two up close candles that was utilized to take out this high, this swing high right here on the monthly time frame. So as long as we are unable to close below these two up close candles, it is bound to be a accumulation or a retracement. Okay, so this is for bonds. For the dollar index, we are in a bearish order flow. So this is one single up close candle. I'm interested to see if we can continue to trade lower, following through with the bearish order flow. So every time we have, or when we encounter like a trending downside or trending upside, in this case it's trending downside, every up close candle we anticipate the next candle to engulf the up close because it's a bearish order flow. So once it prints an up close candle, the next candle, I'm expecting the lows of this candle to be taken out. So I'll be looking for July's low for the US dollar, and because if I'm looking for the July's low on the US dollar, then I'll be bullish on euro. It doesn't necessarily need to trade into this fair value gap, but if it does, then we would be able to see it on the lower time frames, especially the weekly time frame. Okay, so for euro, the same thing. Oops, what just happened? Okay, so for euro, because we are in a bullish order flow, exactly the opposite of dollar, we are going to anticipate this down close candle to be engulfed by an up close candle. Right, that is basic ICT. And then above here, we actually have a fair value gap that was not tagged at all. So that is a very strong draw on liquidity, especially when this candle right here, July, failed to tag into this fair value gap. And then we have equal highs up here, very clean highs above here. So I'll be looking to trade euro towards this level in the month of August. And that also indicates that every single week I'll be looking for bullish prices, bullish power of 3. Likewise for British pound, slightly weaker than euro. We shall see why later, but I'm expecting slightly more downside to hit this fair value gap, this bullish fair value gap, before trading higher, continuing the bullish momentum. And then for the euro / British pound, this is the reason why British pound is lagging behind, because for the past few months we have been bullish. So for euro to be moving way higher, it's going to be easier to trade longs in euro as compared to longs in British pound. Over here we have left very nice clean highs for price to tag, especially for the monthly candle. Look at just this month itself on Friday, it moved so far the range. Alright, this is 1% in one single day on NFP. So I do believe that July's high would be the draw next week, and then we have this swing high here as well for the draw on liquidity, and after that we look for this candles a week, because it's a swing high. All these highs are very I could call them a phantom trend line, if you will. So from here to here, this is the phantom trend line. It's just sideways, how should I say, downside accumulation, and then right now we would be running out all the stops out here. Let me just take a look to see if we have taken out. Okay, so this candle's 50%, like the wick, would be the draw on liquidity as long as we keep pushing higher. And then if we look further to the left, we have very clean highs up here, which could potentially be the draw as well. Okay, so moving into some other forex pairs, just for fun, right? Because those are tradable as well. Okay, we have Euro Australian dollar. On the monthly time frame right now, or for the past few months, it has been bullish. So looking at this week, let me see. The previous high, on the nearest high, traded all the way into 25%. So if it keeps continuing higher, then 50% would be the draw, and then eventually there's two highs. Those are relatively equal as well. So if euro and British pound is not moving, then it allows this pairs to move, right? So I'll be looking to trade longs, permanently longs on this type of alternative pairs if possible on the higher time frame, like for example the 4 hours or the 1 hour. That is possible. For euro Japanese yen as well, we are bullish on the monthly time frame. So right now we have opened up the month within this previous candle. Best case scenario is that we wait for a stop hunt of the previous month's candle, which is the month of July, probably even back down into this inversion before we continue to move higher. Okay, we are permanently bullish. Okay, moving higher would lead us to taking out this high, and yep, that's basically all-time highs for this bear. And then for your British pound covered, yep, and that's pretty much it. Therefore, TLDR, I would still be bullish for next month for the indices and the forex pairs. We just keep looking for high prices. Nothing really much to say here. A more detailed analysis would be given next week because we just ended NFP on Friday. There's really nothing much to say. So next week I would be actively trading. And that's about it. Hope you enjoyed this session here, and I'll see you again